Hey guys, it's Ty,
And I'm Joe.
and we want to invite you on a journey of increasing your financial IQ
By learning about strategies millionaires and billionaires have been using for decades.
Welcome to the Wise Wealth Podcast.
Let's get started. To the Wise Wealth Podcast. We are back another week. We're not stopping. This thing's moving like a freight train. So, hey,
we are just building more and more and more content. We've done, this is week, we'll say episode 8, episode number 8, and we've had some great conversations. We've had some awesome guests on here, and it's going to be great keeping this thing going. We're going to look back on this in a year and 2 years. We're going to have hundreds of hours of content.
That's right. Our guest, you guys are all special. Thank you for tuning in, and let us know how you liked last week's podcast, guys. Let us know what you're thinking of the content. Let us know what you would like to hear. We want to hear from you. So, matter of fact, let's give a gift. Out of everyone who emails and either ask a question, tell us what you like, tell us what you like to hear. We're going to raffle all those names, and we're going to give away a free. Ty's going to give away. Ty is going to give you a free. I'm just kidding. We're going to. How about we'll give 2. We're going to give out 2 books, Becoming Your Own Banker, to everyone who emails. All you got to do is send an email, and tell us what you've liked so far, what you'd like to hear more of, and this could be yours. So
I like it. Let's do it.
Yeah, giving gifts.
Send that email. info@wisewealthpodcast.com.
info@wisewealthpodcast.com. Hey, today we've got a lot to talk about, Ty, because there's some crazy stuff going on with the banks. Some crazy stuff going on with the banks. It's the Credit Suisse. You see what's going on with the Credit Suisse? We saw what happened with the Silicon Valley Bank.
Just about every day, something, another entity, another bank is reporting some serious trouble.
I believe it's 11 major banks now dropped $30 billion in unsecured deposits. And this isn't about doom and gloom, but this is about getting educated, right? Getting educated. Because when we talk about becoming your own banker, when we talk about, life insurance, high cash value life insurance, and these A-rated mutual life insurance companies that have been around for centuries, this one particular carrier that we partner with, Ty, they've been around for 150 years. It's an A-rated company. And check this out. They have paid a dividend year after year after year after year. That's this, World War I, World War II, stop,
every economic depression, if you will, every single one.
Yeah, every single one. Whether it's stock market crashes and by the way, the stock market crash of the Great Depression, it wiped out 40% of banks. 40%. You know how many, A-rated mutual life insurance companies were wiped out? 0. So 40% of banks were wiped out. Hey, and we don't want to start off on such a negative. This is a positive. Like
we have the solution.
There's a solution. So when you think about, 40% of banks, I believe it took 23 years. So 90% of the stock market was wiped out. It took 23 years for them to get back to where they were. But when you research the Dodd-Frank Act, that you just do your own research. The banks are not responsible for your deposits any longer. So this $30 billion that was wiped out, they're not responsible. So you are lending the money, your money to the bank. And then whatever happens to that after that, and again, guys, this is about becoming your own banker. This is about becoming more efficient. This is about increasing your financial IQ, and so that's why the wealthy have this. That's why the wealthiest people in America right here are utilizing this. Ty, what
They're
do we
smart.
what else what else do you have to do? And what do you any thoughts that you have with all this craziness going on?
Yeah, I think we should unpackage a little bit, like what is a bank run? Probably heard that on the news. You probably saw it pop up on maybe if you have like a news watcher on your phone or something, you're like, oh, there's a good old fashioned bank run, or what does that actually mean? So I guess we should talk about that, and then
Sure.
uh, I think we should talk about the FDIC insurance as well. Like, what assurance do you and I have that our deposits in the bank are actually safe,
Hmm.
and how safe are they? So the bank run, if you don't know, like our banking system operates on fractional reserve banking. So when we deposit $1,000 into our checking account, your direct deposit from your paycheck goes into your checking account. The bank only keeps a portion of that there.
That's
You'll be
right.
able to access it for the things that you need, but what they're doing is they are lending and investing our deposits so they can make money. Okay, so it's not like they're putting your $1,000 into a safe lockbox in the back and it just sits there.
Yeah.
What the banks do is they keep money in motion. It doesn't sit because they know when money is stagnant, it's not compounding, it's not growing, it's not accumulating interest. If it's stagnant, they're in trouble. So they have to keep the money in motion. And it's obviously it's not their money. The bank doesn't have money. The bank thrives off of our deposits. So the more we deposit, the better they can do because they'll be able to lend out more. And of course, they're making a lot more money on our money than they are giving us. So you put $1,000 into a checking account and you just have a small, very, very small dividend that's paid. The interest rates are getting a little bit higher. So you could, move your money out of your checking account and put some into like a money market or something and get a little higher interest rate.
Hmm.
But the banks are making two, three, sometimes four times as much in interest. Actually, a lot more than that. They're making a ton more in interest than what they are providing us in dividends if you're comparing that to like a checking account. So, what I mean by that is banks provide auto notes.
Yep.
So, a lot of people they go to the dealership, they get a car going rate with fantastic credit right now, highly qualified purchaser. You're gonna see anywhere from 6 to 9% on an interest rate. Okay. The
Yep.
bank is not, so they had to get the money from somewhere. So your deposit, and then they're gonna poof make money out of nothing, and it's gonna be in the form of a note, and they're gonna lend out money on the other side, and they're gonna be making a lot more profit than what they're giving us in a dividend for our deposits. So they, say you're getting 1% on your deposit, and the bank is lending out that money at 6, 7, 8, 9%, or even more, depending on the borrower. So when the bank run occurs, there is essentially there's a lot of people that are withdrawing at the same time, Joe. Like, so if 50, 60% of people went and asked for a good amount of their deposits or all of their deposits at the same time, what's going to happen is what we're seeing happening. The banks need to create essentially emergency liquidity, and they're having to cash out uh you know investments that they've made, places that they've put money, and it's not the ideal time for them to cash out those investments. So the bank run means that the bank is losing billions of dollars because they had to create liquidity or try to. That's kind of like a Hail Mary when that happens, meaning it may work, it may not work. They're creating liquidity, cashing out at the wrong time. It's kind of like selling your house at the wrong time.
Hmm.
Like you want to sell you want to sell your house when you've got a good amount of equity and the market's doing good. If you if you're forced to sell your house when the market is in the dumpsters, home values have gone down or something like that, and you have to sell it and you have zero equity, you lose money on the house. It's kind of like, I'm not saying that's what they did. I'm saying that's kind of like the comparison between the two. So people go to the bank, they ask for their deposits, and then poof, the bank doesn't have enough money because it wasn't sitting in a lockbox in the back, Joe.
That's right. Yeah, I just had a friend, you and I both know, you know, Jesse told me he went $70,000 and he tried to get out, try to buy a Sprinter van, and he said, I need my money. We don't have your money. What do you mean? My money's in the bank. Give me my 70,000. I'm sorry, sir. We don't have your money.
Yeah.
Mm-hmm.
Isn't that crazy?
Yeah.
I've this wasn't any time recent. This was probably about 5 years ago. I went to a local bank that was housing a business account. I said, I'm going to need to withdraw. I want to say it was maybe $15,000. And you saw the, like, if you're watching the video, you can see the teller was like, what?
Yeah.
The manager comes out. They're like, Mr. Harvey, we're going to need some time. Like,
Yeah.
I'm going to have to order that.
Wow.
I'm like, okay. So we figured out something else to do. I don't remember what it was. Like, I don't know if they did the cashier's check or something, but I wanted cash, but they just didn't have it. It wasn't there. It wasn't there. So you have to understand, the banks just keep the money in motion. They don't have it sitting in the lockbox in the back. They keep a little bit of cash. If you go in on a Friday or something, you're probably not going to get any type of large amount, because everybody, they deposit their checks and checks come in and stuff like that. And they're not, the liquidity in the bank on a Friday is probably going to be much lower than midweek or on a Monday, just because everybody's getting some cash and stuff for the weekend.
So, they keep their money in motion, and, a lot of times the initial reaction is to get mad at the banks when we really should be learning from the banks, right?
Absolutely.
And we can,
Absolutely.
this is what we're talking about doing at a macro level. And we haven't even talked about BOLI yet, the bank owned life insurance.
Mm-hmm.
And you guys need to just look up BOLI and think of let's kind of break that down while we're at it too. Just what is BOLI? Let's talk about BOLI, Ty.
So BOLI stands for bank owned life insurance. So the banks that are very good, typically at making money grow, and keeping money in motion, they know that there is a certain amount of guarantees. There's no gambling that they're taking when they park funds in bank-owned life insurance.
Right.
So banks are some of the largest holders of BOLI. Okay.
I actually have some numbers here.
You got some numbers. Who's the highest? I forgot who it was.
Oh my goodness. $24 billion, Bank of America.
So Bank of America has $24 billion in bank-owned life insurance.
Wells Fargo has 19 billion. JP Morgan Chase has 12 billion. PNC 10 billion. Rounding up the top 10 is Truist Bank at 7, US Bank at 6, Citibank at 5, the Bank of New York Mellon 8, and KeyBank has $4 billion in life insurance.
Joe, why would they put some of their assets into life insurance? Why would they do that? And this isn't like, just so we're clear, they didn't purchase a term life insurance policy. This is cash. That's cash.
Yeah.
That's sitting in life insurance policies.
Well, especially since 2008, banks have increasingly put their capital into whole life insurance. To them, it's a tier one. It's an asset that's guaranteed to perform in a couple ways. Okay, one, it's a growing cash value that will eventually exceed their cash input. of which the growth can be accessed tax-free. So even the banks, you know, they're working the system.
Yes, they are.
Secondly, the certainty of a tax-free windfall in the form of a future death benefit of all these employees. Go back to what would the Rockefellers do? That's why they're still one of the richest families in the world. So, why does this matter to you? Banks are in the business of generating certain and safe returns. And given the amount of the volatility out there, and especially right now, the craziness, this supports having the bucket, right? The bucket of funds and properly structured, high cash value, not just any kind of life insurance. It has to be properly structured, high cash value, permanent life insurance. That's what the banks are doing. So
the banks that we trust with essentially our day-to-day deposits, this is what they're doing. This is the strategy that they're putting, like you said, in their tier one. This is a foundational, like that's the starting point. It's a guarantee that, hey, we're gonna have this guaranteed growth that's happening inside of this vehicle, which is a whole life insurance. So that's
yeah,
very smart. They're not, they're not having to, the whole life insurance is not an investment. It's not an investment vehicle. It's a foundational financial strength vehicle, very systematic savings, and over time it becomes more and more and more efficient the longer you hold it. And eventually, like you said, your deposits that you put into a whole life insurance policy are going to be dwarfed by your cash value, meaning it could be 2, 3, 4 times what you've put into that policy over the whole life of that policy, which is a very powerful thing. I think we talked a lot about what's going on with the bank. What the bank run is, this fractional reserve banking where they lend out our funds are not just sitting in the lockbox. And now we're kind of going into what is the solution. Like even the bank is doing this. The banks that are in trouble right now, they have whole life insurance
Yep.
on their books.
Yep.
So us as normal people, we can actually do the same thing. We can have whole life insurance policies. Can you only have one, Joe? Only one? You're limited to one?
Oh, you can have as many as you know. I mean, you can have multiple on you, your children, anyone that is an insurable interest. You can take a policy out on, and you own the
Yeah,
policy.
that's good.
Hmm.
So I a lot of times, folks, you want whatever you put into a whole life policy to be meaningful, meaning, you could just put, 40, $50 into one, but most likely, if I were to look at your finances, I could find holes where you could put more funds
Mhm.
into that infinite banking policy, the whole life insurance policy. You could put more funds in that, and it's going to make the policy grow faster for you, and you can accomplish two things at once. Now, you don't want to get a policy that is way too big for you to maintain over time, because the longer you hold this policy, the longer you keep it open, which should be your whole life. It's whole life insurance. It should be in force for your entire life, meaning
Correct.
you need to maintain the premiums that you put inside of it. So you don't want it so big that you can't maintain it, because then it
Right.
becomes counterproductive.
Yeah.
So what's the solution to that? You can grow. Like you said, you can have multiple policies.
Yeah.
Maybe the first one you do is 100, 200, $300 a month or something like that.
That's right.
And then you get a raise at work. You have an investment, something. You sell a home, you sell a property, and you open another policy.
Yeah.
You get a raise, promotion, another policy. There's no limit. The only limit, like you said, is going to be on the insurability amount that you have, which
Yeah.
is just going to be a calculation that underwriters are using to see what your maximum life value essentially replaceable life value is going to be for you.
Yeah.
So for example, if I make $10,000 a year and I say, okay, I want a $20 million life insurance policy, they'll say no. It's just way out of skew with what I would need to replace my $10,000 a year income.
Ty, I just had a thought.
What's that?
when you're talking about 100, 200, $300 a month, I think it trips people up sometimes. Guys, everyone wishes they were in a better financial situation, even billionaires.
Mhm.
They're thinking, I should have done this business if I would have made this deal. If I could have been here, I could have bought this business. I'm telling you what, you've got to be content with where you are in complete gratitude and excited about the possibilities because of what you're doing now. Action. And so my
Yeah.
point is, with that, which I just thought is, even if you're someone who's working out, uh, maybe you're not doing CrossFit 4 times a week right now, but maybe you're at least walking. Maybe you've made a change in your breakfast regimen, and instead of eating greasy McDonald's, you're having a healthy, vegan shake every morning, something like that. And you're starting to move. Maybe you don't have the thousands of dollars that you're putting away right now, but what can you do? What can you? That's like that's when Jesus said, what bring it to me what you do have. Scrape up what you do have. We only have 2 fish and five loaves of bread. Well, give it to me and watch. Let me bless it and watch it multiply. So
Mhm.
what can you bring to this this place that you can start storing wealth right now and watch it multiply? Because if you just keep looking at what you don't have rather than what you do have right now, it'll never multiply. It'll
Right.
never multiply. So I joke with my daughter, it's Pasitos da luz, because I went to this orphanage in Mexico last year, and these children had disabilities, and the name of this rehabilitation center was called Pasitos da Luz. And so I tell my little daughter Hannah, Pasitos da Luz, because it's called small steps to the light. So when
Nice.
she takes her small steps and she runs all over the house, and I say Pasitos da Luz.
And
Small
like you
steps.
said, Joe, you have to start somewhere.
Yes.
If
You
you
gotta
just continue to just stay in the spot that you're at, you're like, oh, I'll end up making more money someday. I'm here to tell you, if you have a strategic savings problem or you're not building a solid financial foundation, making more money is not going to fix the problem.
hmm
It's going to make the problem worse.
Oh yeah.
The problem's going to become worse, Joe. So, like, if you make $50,000 now, and you have, you have a budgeting issue, you don't have any type of foundational systematic savings in place, and you make 150,000, in a couple years, the problem is just going to grow.
Yep.
Money doesn't fix anything. It has the ability and the power to
Yes.
become more useful to you.
Yes. You
And
need to,
one of the most powerful things it can do for you is create time.
yep.
It can create leverage, but
hmm
you have to position that money properly. If you
Correct.
don't position it properly, it and you just it just it comes in and it just goes out. And there's you're not putting any of that aside. You're not building a financial foundation for for your increase in income to actually be more beneficial to you. It's just going to be a bigger problem.
And you
You're just
will
going to have
have
a bigger problem.
a swagger about you. You will feel good about yourself as a provider, as a leader, whether you're a husband or a wife, single, married, college student, single parent. You will have the swagger about you, and you will know that you are taking care of business when it comes to building wealth, that you are taking care of business because you're paying yourself first. You may not be where you know you're going to be 5 years from today,
Mhm.
but pasitos da luz, small
Small
steps to
steps.
the light. Pasitos da luz. We should name this Pasitos da Luz. And you will have a confidence about you. And what you feel determines what you do. Remember, it's the see, feel, act progression that I talked about in previous podcast. How you see things determines what you feel. What you feel determines what you do. I'm telling you, the people that we help get something in place, whether it's small or no matter how big it is, they carry this swagger about them, don't they, Ty?
They
It's
do.
like, man, look at they just kind of I am official. I'm building my own bank. Whether
Yes.
whether it's a
huge
couple
step.
thousand in there or a couple hundred or a few millions that we have helped client, it's like, I've got a bank,
Every time somebody gets their bank issued and I give them their documents,
Uh-huh.
I'm telling them, congratulations, you did
Yes.
it. Like this is your first, especially if it's their first policy. Congratulations.
Yeah.
You're approved. It's been issued, like it's live. Like, congratulations, you did it.
Yeah.
And I'm like clapping for them because I'm
Yeah.
like, welcome to the party. Like, this is going to be huge for you and your family.
And if that's you, I'm going to say congratulations. And I encourage you to ask questions, when you're having coffee around the table, when you're at, the Thanksgiving dinners, when you're at, you're around your family and friends or coworkers, and just ask them, hey, what are you guys doing to build wealth? What are you doing to pay? How are you paying yourself first? These are questions that can change people's lives. The quality of the questions determines the quality of the answers. And you can be a catalyst to really change people's financial legacies. When you let them know what you're doing,
Yeah.
and
Don't keep
you're
it a
going to give
secret.
hope.
Yeah.
Yeah, because I'm telling you, people are looking to unbank themselves right now. They're looking to unbank themselves, but they just don't know how, because they don't understand. Okay, if I'm going to unbank I know this is on thin ice. President says, "Hey, the government has it from here."
Oh, everything should be fine. We can just end the episode there, Joe.
Yeah, but and
President
so
said everything's fine.
we
So
know that's
we'll
thin
just
ice, but where can we trust? And guys, it's here, but you just need to get educated. So, Ty, that's all I have for on my end. What do you want to leave the people with this week, brother?
yeah, I guess one last I just want to give one last statistic to just put something in perspective. Like,
Yeah,
okay, so we said the bank, we've really beat up the bank on this episode. Obviously, everybody can see what's happening. But how is the life insurance company any different? They're obviously doing something with our money when we give it to them, right?
they're sitting
So
there.
they're running a business. So they're going to invest their funds also. But the difference is they're much more conservative even than the bank. And
Right,
they have liquidity requirements so that you can access. And then, of course, it's an insurance company, so they can pay the huge claims that happen every day that they get, because insurance companies do life insurance, whole life and term. So people are passing away as we speak, and they're going to have claims that come in to pay out those life insurance policies. So and I just want to give this statistic, and this is one of the A-rated carriers that are out there. This is their debt to capital ratio on one of their last reports. And it says they had $62.9 million in debt. You're
wow.
like, whew, wow, that's a lot of debt, right? It seems like a lot.
Hmm.
That represented 3.2% of their capital and surplus that they're
Oh,
holding on hand.
yeah. I think they're doing okay.
that I'm going to say that again. They have $62.9 million in debt, and that was only 3.2% in comparison to their capital and surplus that's on hand.
We're doing okay here.
They're
It's
they're going to be okay, guys.
Be all right.
They can pay out their multi-million dollar life insurance claims when somebody passes away. When you need cash from your private bank, they'll be okay. They'll be able to send you your cash.
They're gonna be
Like,
all
they'll
right.
be fine.
They're gonna be
So
okay.
it's a much different scenario than what the banks are holding on hand, because your money is not sitting in the lockbox in the back.
Yeah.
So again, the solution is start a bank.
Start a
Start
bank.
your own private bank. Get your own infinite banking policy, and it's going to unlock doors. You're going to have all kinds of opportunities that are going to land into your lap, and this will be the best decision that you've ever made.
Correct.
for your finances.
Come on. Yeah. Well, thank you guys for joining us. We hope you appreciated the spending time with us. So we don't take it lightly that you guys are here. Thank you for listening. Would you please listen, like, and subscribe? Give us
Yes,
a
please.
5-star review. Tell a friend, tell a neighbor, tell a brother, a mother. We would love to help you guys. Any questions? Wise Wealth Pod. Tell them where they can reach us. Ty, go ahead.
Yep. You go to wisewealthpodcast.com, and then you can email us. And remember, we're giving away 2 copies of Becoming Your Own Banker. If you want to be one, just send us a note. Tell us what you like, or even say, what would you like to hear more about. We can schedule that in on a future podcast. It's info@wisewealthpodcast.com. Look forward to hearing from you all, and we'll see you on the next episode.
Peace.
God bless. If you would like more individual information on infinite banking or retirement account solutions, Joe and Ty would be glad to connect with you individually. Please email us at info@wisewealthpodcast.com, or you may visit us at our website at wisewealthpodcast.com and contact us there.